Welcome back. While we await Laddie Williams with the global stories, let's tell you how the market fared last week. We start from, of course, the NGX. So even though we saw them celebrating women right there on Friday, but the market was in the red, as you'd have expected. We only had one positive trading session at the close of last week. So the all-share index lost 1.19%. Closed at 106,538.60. Equities around 66 trillion, 66.71 trillion. Activity charts we see, oh, I have it right here. Okay, great. So we have, it was more of red as expected. Profit taking is just going on. I've been trying to find out from stockbrokers what's really going on there. This is not Trump's tariff that is affecting our stock market. So, but we saw volume in the red at 1.81 billion, value also in the red, 47.22 billion. Just deals made it up to the green at the close of trade. Our most beloved banking, looking at the sectors now, closed in the red. See, it's a red board. Banking lost. The Fugas still have a lot of profit-taking investors. I don't know. Okay, I don't think we've seen a lot of resolve from the banking banks, you know. Perhaps that's why investors are not so sure about what's going on there. We see more results to give more direction. So we saw banking lost almost 3%, 2.87%. Consumer goods, 1.72%. Industrial, slightly down. Insurance, that used to surge and was picking up a whole life, we saw it down also 2.33%. Oil and gas, of course, we saw a lot of profit taken on most major, O&O included in that. So oil and gas closed in the red also for the week, 0.19%. Top gainers, Tantalizers, PLC, UH Real Estate, and Livestock. Well, livestock is getting in the news. We see the federal government giving it attention after the creation of the ministry. I believe last week we saw Professor Jegabi giving a position to also overlook activities around livestock. So perhaps that's why our investors are also looking that way. Hope it's sustained. And then the top losers, Etana PLC, one of the drivers of that oil and gas loss that we saw. So down. Transnational Corporation also down, lost 17.72. FCMB Group also did lose 14 points. Top trades were mostly the banking sectors, the big guys in the banking, but it's because of profit-taking, Fidelity, Access, and Zenith Bank were made up the top trades, but they were mostly in the red last week. So I do hope with this decline prices, investors will try to hop on and take advantage of that reduced price, and we'll have a green market this week. I guess I'm being selfish because I'm going to be on the stock market this week, so I do hope to report a positive market from today, Monday, till the end of the week. But let's see what's happening in the global space. Laddie, is it still Trump tariff that's headlining everything?
Yeah, still mostly tariffs at this point, but there's also economic data we're expecting this week. So investors be watching out for clues when it comes to inflation and CPI data for most of the major economies at this point. So that's also going to drive sentiment. It's not just tariffs. At this point, there are other things to look at, but tariffs are very important.
Tariffs are important.
Yeah, investors won't look away from that. But let's get the top expectations there for this week. We see it's inflation reporting season. We're expecting U.S. CPI this week. The Bureau of Labor Statistics, the figures, we're expecting that Wednesday, projected to show that the consumer price index minus food and energy climbed 0.3%. Based on median estimates of economists surveyed, while less than January's 0.4% gain that's for January. That magnitude increase leaves annual price growth elevated. Then for Japan, the Cabinet Office will release revised GDP data for the final quarter of 2024. That's coming up tomorrow. Maybe you might get that later on today. The median projection of the fourth quarter GDP growth by economists poll shows that 0.7% and 0.5 to 0.8% was the forecast. On an annualized rate, that's 2.8%. The preliminary Q4 GDP data released last month showed the much stronger than expected growth was largely due to a technical rebound in net exports of about 0.7 percentage points. That was caused by a sharper than expected slump in imports and masked weak exports. Domestic demand trimmed total domestic output by 0.1 points. The Q3 GDP by 0.5 points, underscoring the wobbly recovery that we see right there in Japan. They're also expecting the OPEC MOMR, that's the monthly report, monthly oil market report. We're expecting the one for February. We'll get data on oil demand and supply for the month of February. Analyzing the world markets, it covers key issues such as oil demand, supply, and market balance. According to February 2025 OPEC monthly oil market report, the global oil demand growth forecast for 2025 remains at 1.4 million barrels per day, with most of the growth expected to come from non-OECD countries, while developed economies are projected to see that flat demand growth. And moving on to Germany, now we're also expecting inflation numbers for Germany. Germany's annual inflation rate, that came in at unchanged, but weaker than expected there, about 2.8% in February, according to provisional data from the statistics agency. That's the status last month. We'll get the final data this week. That's coming Friday, 14th of March. So definitely that's going to impact sentiment in the market. Then Japan's real wages, that fell in January after 2 months of slight gains. That showed days before the annual rounds of pay negotiations held each spring for that market. Despite the regular pay rising the most in more than 30 years and overtime pay increasing, lifting nominal wages, inflation is at a 2-year high. That dragged down the real wages, the indicator policymakers see as key to achieving consumption-driven economic growth. That's very important for any economy. Now, JP Morgan, they've hiked their Eurozone's 2025 economic growth forecast. They've joined Wall Street peer Goldman Sachs to forecast a boost to the euro area's economic growth for 2025 on the back of Germany's fiscal loosening reforms. Similar to Goldman, JPM expects growth to increase by 0.1 percentage points to 0.8% for 2026. JP Morgan expects 1.2% growth, up by 0.3 percentage points. Then, with all the jitters in the market, we see Bitcoin fell today, over the weekend mostly, extending a recent run of losses as markets were little enthused about U.S. President Donald Trump's forming of a strategic reserve and hosting of a White House crypto summit. Broader market uncertainty also weighed on appetite for risk-driven assets as traders they fretted over a slowing U.S. economy and Trump's plans for more trade tariffs. So that didn't impress the crypto investors. I guess it's a sell the news event. Then for China, over the weekend we see bond yields, they jumped to a 3-month high. China's sovereign bond prices, but the drop today pushing yields to their highest levels this year as investors trimmed holdings on bets that additional fiscal spending will boost growth and push back interest rate cuts. Yields on China's 10-year government bond, which moves inversely to prices, gained over 10 basis points today to hit 1.865%, their highest level this year, and marks a rise of 25 basis points from January's record. Then, from Saturday, China hit back at Canada with fresh Greek tariffs. China announced tariffs over $2.6 billion worth of Canadian agricultural and food products. That happened on Saturday's retaliation over levies Ottawa introduced in October, and opening a new front in a trade war largely driven by U.S. President Donald Trump's tariff threats. I see that reverberating over most economies. All right, let's get a check on what's playing out in the UK. We have data from the Recruitment and Employment Confederation. That's in the UK. We have Juliana to help us break that down. Great to have you, Juliana. Happy New Week.
Happy New Week. Good morning, Laddie.
Good morning. So what is this survey? What is it telling us about the job market in Britain?
Well, it's telling else, that the pace of hiring is significantly slowing, and starting salaries in the UK are at the lowest level since 2021, and you're quite right to say that this data was released this morning by the Recruitment and Employment Confederation. I think they partnered with KPMG. And this comes, of course, just before we expect labour costs to rise for employers, because, of course, we know that the Chancellor Rachel Reeves announced last year that from April, national insurance is going to increase by about £25 billion per annum, and minimum wage is going to rise by 6.7%. Now, of course, for employers, this is great news, because everybody wants to have more money in their back pocket, particularly at a time when the cost of living is so high. But businesses have been struggling. There have been a series of open letters written to the Chancellor saying that this is coming at the wrong time. And I think data such as what we received this morning does kind of double down on some of those major concerns. It's been a really long winter. It was beautiful weather in England this weekend, and there are hopes that when the sun is shining, of course, people are happier, people spend more money, but that's only if they can afford it. And the data does indicate that, you know, labour, there could be some major labour concerns over the next couple of weeks and months, piling even more pressure on the Bank of England and interest rate decisions when they meet at Threadneedle Street next week, Laddie.
Yeah, so much to expect there, especially with the jobs markets with most of the major economies. But we got more tariff jitters over the weekend. This time is China on Canada. How's the UK responding to, tariff concerns so far?
Yeah, it's really interesting, isn't it? I heard you speaking about Canada just now. I'm actually looking at my screen. I'm having a look at the new Prime Minister, Mark Carney, who, of course, was elected yesterday to replace Justin Trudeau. What's quite interesting about Mark Carney, as you will know, Laddie, is that he was a former Bank of England manager, twice, in fact. So he has quite a close, cosy relationship with Britain and the mechanisms of Britain and our Prime Minister. Sir Keir Starmer, who, as we know, has been doing really well on the diplomatic stage over the past couple of weeks, at a time that can only be described as possibly the most dangerous and complex moment internationally since the end of the Cold War. Now, it does appear on the surface that Britain, considering its isolated location and in the wake of Brexit, may have kind of dodged the, should we say, direct targets from Donald Trump. But absolutely, these tariffs are going to have massive impact on us, particularly when it comes to supply chains and small to medium-sized enterprises. Already, we've got the British hacks hacking through what potentially could be in Rachel Reeves's spring statement, which is due in a couple of weeks. And certainly, lots of the announcements in the spring statement are going to be as a direct result of the fear of these Trump tariffs. So yes, Britain's still very much in the centre at the moment, coming out in all its glory. But, we're barely 2 months into Trump's presidency. So who knows how long this kind of adoration for Sir Keir Starmer is going to last.
Yeah, quite interesting. And it's a new week. What market-moving economic data should we be looking forward to in the UK?
Yeah, it's a new week, Laddie. Of course, we know that I believe there are talks in Saudi. Zelensky, the Ukrainian president, he is on his way to Riyadh to meet with Crown Prince bin Salman. Of course, this is going to have major market reactions depending on how that discussion goes. I believe Mark Rubio, the Secretary of State for the US, is going to be there. Hopefully it won't be, the fisticuffs we saw in the Oval Office. But apart from that, I think the big one in the UK has got to be Friday. GDP data, the economy is very much limping. So hopefully, it's going to be positive data, but I don't think the markets have priced that in.
Right, so much to expect this week, definitely. We'll see how the markets react later on. That's at 1 p.m. Thank you so much, Juliana, for the details.
Thanks, Laddie.
Yeah, so there you have it. Inflation reporting season. Definitely investors be watching out for the numbers that come out in the major economies. We also have UK GDP coming up this Friday. And I'm sure investors are still trying to find some kind of hope in most of these risk assets that they like to invest in, hoping they get good returns, in 2025 with all of the somewhat negative news we're getting.
Yeah,
so
Laddie,
far.
on Friday I had a conversation with someone from the crypto community, and I asked her, has the crypto community lost faith in Trump? Because, the crypto community was really, really excited when Trump won. We remember when that result came out, the market surged. And then we now start hearing talks about the U.S. keeping its reserve in cryptocurrency, and that was also exciting. But unfortunately, now when the executive order that the reserve was actually going to start, I think we now saw the reality of it. I think what she said was they now realize that it's not like the United States is going to start buying crypto from source. They're waiting for crypto that has been seized, looted. Yeah.
That'll be put in the reserve.
Exactly. So it doesn't really move the market. It doesn't really increase the demand in the market. So how does it now,
Or maybe the crypto investors are just expecting too much from the U.S., at this point, because I feel like it's a no-brainer. After President Donald Trump got elected and took office, it's expected. Sell the news. He's in office now.
Not even after the meme coin of both Donald Trump and his wife.
The meme coins didn't do well.
Yeah, they didn't do well.
Yeah, quite disappointing.
So I guess, help me tell you guys that it's time to face reality.
Exactly.
Take your eyes off.
Maybe it's time for a bear market.
Donald Trump.
Right.
Yeah, we might be at it. But Laddie, another thing that is also selling at this time is the defense sector. So even in Europe, in the UK, I think Juliana also mentioned it.
Defense spending going up.
Yes, yeah, the defense spending is going up. In Europe, it's also going up. But at what cost? That's the thing, because that money would have to come from somewhere. And one other sector would have to be deprived, for that spending to go into defense. Even though the stocks are doing well, for instance, in the Europe, but what about the people? What's going to happen to their welfare, social spending?
And the citizens are okay, with government trying to raise revenue, but they don't want to hear about higher taxes at this point. We're already seeing that play
Where
out.
will the money be coming from?
Exactly, with the cost of living crisis.
Now, last year, the UK government had announced how they will increase taxes because they want to rehabilitate or replace some of the infrastructure like the power and all of that. Those things are getting old, and so they want to. So by the time you now add this increased defense spending on it, well, it was never
makes it quite difficult.
It was never easy to live in the UK, as Juliana always tells us. So I don't know what it will be like.
So it's quite interesting. We'll definitely see some investors try to pivot. At this time, they'll be following the news. They see that, defense spending wants to go up. They might now look at, defense, stocks and see how they can plug into all of that. But that's how investors think. They want to go where the party is going next.
I think you're already looking that way. All right, Laddie, see you at 1 p.m.
See you.
Yeah, all right. So that's it on the program. Laddie will be back here at 1 p.m. during Business Incorporated. He'll be here with Anita Edet to take you around the world of business, the different segments of business. And I will remind him it's still Celebration of Women. I hope he has that planned. But that's it from me. I'll see you at 10 p.m., the 10 p.m. news during the stock market report. And I do hope it will be a green week at the NGX. Bye-bye.